I am Ibrahim Sani, and you're watching Market Talk. My guest today is Dato Kamaruzaman Ahmad, the CEO of KWAP, or Retirement Fund Incorporated. He was appointed in May 2013, and under his leadership, the pension fund has grown on an average growth rate of 11%, and the average gross return on investment is averaging at 6.5%. KWAP is Malaysia's second largest pension fund, with a total fund size of 133 billion to date, making it one of the country's key investment arms. And incorporated in 2017, KWAP has managed investment in many portfolios, including those in the tech sector. Welcome to the show, Dato.
Thank you for having me here today, Sani.
Earlier this week, our Prime Minister, Dato Sri Najib Tun Razak, made a very lavish kind of statement saying that KWAP has the opportunity to grow up to 500 billion ringgit by 2050. How realistic is this growth rate in your opinion?
No, I think it's a very achievable kind of target based on a couple of assumptions, among which is assumptions that the market remains good as it has performed over the last few years, and at the same time the level of contribution that the government, statutory bodies and local authorities also contribute towards the pensioners. So their contributions will continue to help ourselves grow, and as well as the investment incomes that we have been making, as you have mentioned, about 6% on the average, will continue to propel, and on that kind of assumptions, the 500 billion target for 2050 is very, very achievable.
And of course, we know that not every time the market will continue to perform well year in, year out for the next 30 years. In fact, the ringgit has dropped significantly over the past few years to levels that we haven't seen since 1998. Has the depreciation of ringgit affected your business going forward?
No, in terms of our exposure towards overseas market, it's not as big as some of our counterparts, you know. At the moment, it's only 11.5% of our exposure abroad. The bulk of it, 88.5%, is invested domestically. Although we aspire to invest up to 19% based on our strategic asset allocation to invest abroad, but at the moment we have not been able to achieve that because of the consideration of the weak ringgit at this point of time. I think ringgit, to be fair, I think in the last 2 years has depreciated about 27%. The biggest move was in 2015. It depreciated 22.8%. And then last year, it depreciated 4.3%. But where it closed at 31st December at 4.48, right now I think it has appreciated back closer towards 5% of around 4.26, 4.27 at this point of time. At the same time, we also have our hedging policy. We need to hedge a minimum of 50% of our exposure. So the weakness of the ringgit has not really impacted us that much, you know, because of the hedging policy, and the exposure is not as big as what others have actually.
Now, with this in mind, do you think that you should be a little bit bullish on your foreign investments? Just to look at the other side of the coin, EPF spends about 1/4 of the investment overseas, and on the contrast, PNB, only 3% is investing in overseas. That's a little bit more conservative.
Yeah, somewhere in between.
Yeah. Do you think that this is the time for you to go bullish and go big on foreign investments?
No, I think really it's very difficult to say across asset classes. You have to look at the asset classes. Maybe equity market, certain countries, certain regions has the potential for further enhancement of returns when we invest abroad. But under the low interest rate environments, if you invest in fixed income, the returns are very low. So we still have the aspirations to cover across all asset classes, but certain asset classes, due to considerations like, low returns, it is still not viable because our asset allocations are not just on one asset class, it is on a variety of asset class.
Let's talk about some asset classes that, you can note. Right now, KWAP is trying to establish a strong relationship with property developers, most notably E&O, very recently, where KWAP plans to spend a few hundred million. Is this the trend for KWAP trying to partner and invest directly into property developers?
Yes, I think in the search of returns as well, we wanted to get a bit of the upside in terms of property development and not just property investments after the property has been completed, like what we used to do when we buy buildings abroad and as well as locally. So we wanted to get a bit of a skin in the game, actually. But obviously, we don't have the capacity, so partnering reputable companies like E&O and many others, I think, will be, the model for us. For us, I think what we have done with E&O, we bought a piece of land at Sri Tanjung Pinang 2A in Penang, a reclaimed area of Gurney Drive, the equivalent of 100 over acres for that 20%. And that value is about 766 million ringgit. And we have to develop the land, obviously, and the land is coming, should be in our possession by September this year. And after that, we have to look at what we want to do with those lands. I think we have recently set up a property development SPV company, to spearhead our property development. And with that, I think it's not just going to be focusing on the E&O project, it'll be focusing on many other projects that we envision to be participating, among which is one of them is the one that we recently signed an MOU, although non-binding, the one at Mission Valley with Sime Darby and Brunsfield.
Now, of course, with Sime Darby and Brunsfield, this is more of a G2G kind of collaboration, if I'm correct.
Well, it's not exactly G2G. It is very purely on a commercial basis, For us, we are going to invest in phases, if possible, because if the phase one is profitable for us, we will go into the second and third phase as well, But I think it's very much purely a commercial decision rather than on a G2G basis.
Okay. We'll take a short break, but when we come back, we'll discuss more on KWAP and their investments, particularly in the tech sector. Don't go anywhere. Today, I have with me Dato Kamaruzaman, the CEO of KWAP, and we're discussing not only the growth rate of KWAP, but also some of the strategies that they have put in place in terms of investment. And of course, we just spoke about this just now, Dato, where you tend to focus a little bit more on the various asset classes. And one asset class that I want to focus on is on equity, predominantly in the tech sector. A few weeks ago, we saw reports that KWAP has invested 100 million ringgit for a 5% stake in E.co, the subsidiary of Axiata. And this, while maybe good for you, has pushed up the valuation of E.co quite substantially. Could you care to comment on this particular investment?
Okay, in the first place, the investment is actually $100 million for a 5% stake, actually. So that is substantial for us. I think that is the biggest investment in terms of direct investments in the PE space. But E.co, I think the business is about telco towers, not just in Malaysia, but also all over the region, including not just Southeast Asia, but also some countries in Asia, which includes Bangladesh, Sri Lanka, and others. So I think the valuation of the company is done very fairly, and for that reasons, I think we use a third party to do the valuations, and our advisors that is a fair pricing, and we entered that on a very open and transparent basis, which is the full 5% block that was offered to the market. We took the whole block actually, but that is actually, honestly, it is a part of our investments under infrastructure. Under our alternative space, we have 3 types of asset classes under that, which is real estate, private equity, and infrastructure. So Telco Towers investments in E.co falls under our infrastructure. Before that, we have 0 investments.
Now, is it correct that under the alternative allocation was previously set around 6 or 7%, but it has been moved up to 14%,
Exactly.
and right now you're still halfway through, so there's a lot of room for you to invest.
Exactly. Yes, we did revise our asset allocation in 2016 from 10% in the alternative space to increase it to 14%. But at the moment, I think we are still underinvested in that space. So we are still looking for investment opportunities and investments like E.co and in the infrastructure space, and then investments in ENO and Mission Valley in the real estate space. I think we are still looking at a few more other big ticket items to invest, especially in the real estate space. Whereas the PE space, we are quite, PE investments in funds in particular, we are quite nearly fully invested there. We have about 26 different funds that we invest, not just locally. We had one first local PE funds, but we are invested globally on the PE side.
Is KWAP's investment in Grab part of this allocation, the alternative allocation?
We are not invested in Grab, we are invested in Uber.
Uber, okay.
Yes, correct.
Yes.
Uber, we bought a stake in Uber last year in 2016, the equivalent of $30 million. It's a very small stake for a company that is valued at that point of time $62.5 billion. Right now, the valuations is, they say 68, 69 billion, but remains to be seen because they still have not listed, although they are also facing some headline news these days, but they are still, we still think that the investment still is already in the money for us at this point of time. Yes, that investment in Uber is one of the investments in the tech space. We also have invested in another venture cap fund, a small one. We invested $20 million in a venture cap funds that purely look at investments in the tech space in private equity.
It's not common for pension funds to go aggressive in the PE space. It's normally in the money market space, yes, in the debt market space. Is it because of the need for you to get that double-digit returns?
Yes.
Is that the reason for you to chase after this fast cash?
Okay, in the first place, we have to look at our risk appetite in general. What our risk appetite currently is, we are at moderate risk. And for moderate risk, we can look at investing in certain types of investments that carry those moderate risks. For instance, in the PE space, in terms of tech funds, we can invest not in the initial stage where, like in the A series or the early series. We can only invest in the B series onwards, and that also has certain other criteria. For instance, they have to have certain cash flow, certain, track record, the product acceptance, there are many other criteria. So that limits ourselves in terms of exposure into something that is high risk in nature.
Again, the average gross rate per growth per annum is at 11.5%. This is for the past 10 years. And this number has actually been slowing down for the past few years. With 1.7 million civil servants currently in service, when most of them, if not nearly all of them, are opting the pension fund scheme or defined benefit scheme, do you think that the time is right for us to make the call for the government to either reduce the number of civil servants in the country or ask them to choose the EPF option or the defined contribution option?
I think that is a policy decision that the government has to decide. For us, we are just an implementer. What we did was that, in 2015, November, we took over the pension payment that pays the monthly pension to all the pensioners, the equivalent of nearly 700,000 pensioners. And then at the same time, our other stakeholders are the current civil service, as you have mentioned, the size of nearly 1.7 million civil servants actually. So those are our key stakeholders. So on the pension side, we have done that. So at the moment, the liability part, we have not taken over the liability. The liability is still under the government, and the government pays undertake the liability, which is, I think, the equivalent of about last year was 18.8 billion per
yes.
annum. Per annum, you know,
Yeah.
so, and it's growing over the years because the number of civil servants that is retiring is about 28,000 per annum. Of course, there are attrition rate, you know, for those who passes away, you know, ultimately the net effect is closer towards 18 or 20,000 per annum. So the liability will continue to grow, you know, and whether it's enough or not, definitely at this point of time, the liability gap between the KWAP fund size of 135 billion right now is actually still not sufficient to finance the overall liability. What we did since we took over the pension side, we did a study. First thing, we did a demographic study of all the pensioners. So, meaning to say that that is important data for us to see what we can do towards, you know, providing value-added services to the pensioners and to identify the size and types of liability that we're going to face in the future. And then secondly, this year, what we did was that we did the liability gap. And unfortunately, I cannot share with you because the reports has been is already ready, approved by our board and submitted to the Ministry of Finance. It's up to the Ministry of Finance whether they want to release the report. But as far as I can tell you, the liability gap is about the same as what we have been facing over the last few years. It has not narrowed the gap between KWAP fund size growth and the liability, that the pension liability. It remains the same. The gap remains remains there, and it's not narrowing at this point of time.
So that means it's good. It's sufficient to assume that the gap is growing at also 11% per annum.
Yes, but the gaps, of course, 11. I would say the growth is actually in spurts because, especially if the government revises the salary of civil servants, suddenly it will grow in spurts like that. On an annual basis, we are catching up. But if the government continue to revise salary or give goodies to the civil servants, obviously the gap will probably remains, or it depends on the size of the revision that the government has. But what we want to do is that we want to ensure, obviously the gap grows, the KWAP fund size needs to grow faster, either via investments or via contributions. But we are in dialogue session with the government to see how we can narrow the gap actually. There can also be a formula to it, to how to narrow the gap.
We'll take a short break, but when we come back, we'll discuss more on the pension fund situation in the country. Don't go anywhere. Welcome back to Market Talk with me, Ibrahim Sani. Today we have Dato Kamaruzaman, the CEO of KWAP, and we're discussing the issue of pension funds in the country and how the gap is not narrowing despite the rapid growth of the pension fund itself. Dato Wan, you were mentioning just now that there is a formula to narrow the gap. What would be the formula then?
No, I think previously it has been discussed. This formula is whereby, you know, the liability later on that KWAP, once KWAP reaches a certain fund size, and the liability will be slowly given to KWAP in stages actually. For instance, one of the earlier formulas that was thought to be the solution to it is that the KWAP fund was first set up in 1991. So civil servants who joins the service in 1991, when they retire, they will go under the KWAP punya pension. The liability will be borne by KWAP actually. So they will retire in stages. After 30 or 35 years of service, You know. So slowly KWAP will take over that liability in stages. So and at the same time, KWAP fund size will continue to grow. And with that,
the liability of the government reduces over time.
Exactly. So it's government reduces, KWAP's liability will increase.
Yes.
So that's the formula that I think.
But it's not happening right now. In fact,
now,
you don't have a slither of liability on your books.
Yes, correct.
And why is that so?
No, I think the government is very responsible. The government wants KWAP to grow our fund size as much as possible. So right now the liability is all under the government, and KWAP's role is to grow that fund size with good investment decisions, plus the contributions that we get from all these federal government, the statutory bodies, the local institutions.
The growth size of KWAP is actually admirable. After 10 years of being around, you are 1/6 the size of EPF.
Exactly.
EPF targets to be 1 trillion in the next few decades. You're targeting half that in the next few decades as well. It's suffice to say that your growth could be twice or thrice as fast as or faster than EPF.
Yes.
When do you think will this transferment of liability take place between the government to EPF?
Oh, the change from pension to the EPF scheme, you mean to say, that is a policy decision I think the government will have to undertake. And at the moment, policy decisions is not under KWAP, it's still decided by the government. So the government will have to make that call actually. But the government will need to obviously engage with KWAP, and they have to obviously see how KWAP fund size is sufficient, when KWAP fund size is sufficient enough to take over that liability.
Do you believe that you have the necessary influence to get at some of the policies that you deem as quite critical for the government to adopt? Do you think that you have the necessary clout to influence the government to choose that kind of policy?
Yeah. No, I think we have done what we need to do, but I think ultimately because the decision involving the stakeholders is more than 1 million, 1.7 million stakeholders, I think the government will need to discuss this with the relevant parties, in particular with KWAPs, the trade union for the civil servants. I think those engagements are much more critical, but we always want to be a part of the engagement, because I think we can have we can provide some valuable inputs with what we have in terms of the data and the pension liability studies, the gaps.
We don't have much time left, but can you just share with us some of the market outlook that is in store for us?
No, I think you have seen that EPF did very well in the first quarter. Unfortunately, KWAP did not announce our quarterly results. We always announce maybe 1 year at the end of the financial year, the results. I think that shows how good the market was in the first quarter, when EPF did 11 over billion in terms of their performance, well beyond their previous corresponding period, first quarter of 2016. But we also did very well, but our strategy is actually slightly different. What we did was that we put a lot more money into the market as the market was rising. We were confident that the market took a change from the last 3 years when the market took a dip, and we put more money in the equity market. So we did not realize so much profits because we were still buying or putting more money into the local equity market. I think this strategy is, like I said, different than EPF strategy, but it remains to be seen whether this strategy is a better strategy, or realizing profits on the front end is a better strategy. But the market looks good. The market looks to be holding pretty well. The foreign investors has come in more than 10 billion already to buy up our local equity market, and that is because first thing is that they have been selling over the last few years. The foreign shareholding has dropped from 25.6% in 2013 to 22.5% last year. Now they are coming back again, And then I think the overall market was very good. The global markets in particular, despite all these political uncertainties, I think you can see the Brexit, the UK election, Donald Trump itself, I think bearing aside political, yes, yet the market remains buoyant. among which I think one thing about Malaysia, the advantage is that our first quarter GDP numbers are fantastic at 5.6%, well beyond above expectations. I think basically that is due to our strong export sector in particular. With that kind of GDP numbers, we still think that corporate earnings will be able to sustain these kinds of momentum. And with that, I think we still believe that there's a bit of more run to the current bullish trend. We feel that 1850 is achievable for this year.
Dato, thank you very much. We have to end here. That was Dato Wan Kamaruzaman, the CEO of KWAP, and that wraps up this edition of Market Talk. What do you think of this episode? Send us your feedback on all our social media platforms, on Facebook, Twitter and Instagram, and follow us there at 501 AWANI. Download our app on the Google Play and the Apple App Store. I'm Ibrahim Sani. Thanks for watching.